Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host. We're glad to see you back. Hey, if you wouldn't mind, if you've not already done so, if you could please subscribe to the podcast. It's on lots of channels, Apple, iTunes, iHeartRadio, Stitcher, you name it, it's out there. And while you're out there doing that, please visit globalinvestoragent.com. This is where you'll find real estate agents who are trained to work with you and I who like to invest in real estate. Okay. And if you are an agent and you're not sure what to do right now in this market, click on Learn More, because you definitely need to make this part of your model to not just serve owner occupants, but also serve investors correctly. Like learn how to use the right terminology, methodology, so that you can make a lot of money. So, in any case, without further ado, we got some great guests today. Carey Ann and Jody Watson are joining us from beautiful Nashville, Tennessee. So, welcome aboard, guys. We're glad to have you here.
Yes,
Hi,
thank you so much. Yes, we're excited to be here. I'll put my glasses on so I can now see you there. Gary, okay, love it.
Well, I'll tell you what. I know we've been chatting a little bit ahead of time. And I did some research, and the business you're in, it's absolutely critical to the real estate industry. It's one of the top three things that we need to have happen. And the market's obviously been changing, so everybody's interested. They're on pins and needles. Well, what do we do now? Is there a program for me? Is there, can I sell? Can I buy? How much should I finance? Everything's just changing so rapidly. What are the interest rates doing? If you wouldn't mind, would you mind kind of, and we're not going to hold you to this like, hey, Carey Ann said this is going to happen. What we're looking for is really just kind of your own interpretation of how we got here and where we're likely to go, and the fact that there are always programs available, right?
Yeah, I've been in the mortgage business now 22 years. I opened and brought CMG Financial to the Nashville market 9.5 years ago, and started my team called Carey Ann and my mortgage team. And Jody is one of our leading specialists, loan specialists on the team. And over the many years in this industry, we've seen the ups and downs and all the things. And what I would say is we always are moving in a forward direction. So some people might say it's a down market. Some people may say right now it's a normal market. Rates are just relative to the one, looking at it, or possibly maybe not even understanding the whole, concept. Today, we are going to be talking about something that changes the whole outlook. And it's not a new concept. It's been out in Western Europe, in Canada, and Australia for decades. But really grateful to be with a company that is very innovative, that thinks 2 steps ahead. And so when the market does make a shift, what programs can shine bright, especially for our investor community. And this program today that we're going to be talking about is really making a difference for so many. It's not about interest rate. And Jody will go in the details of all of that as well. And that's what's really great about, the program. We're going to be talking about something that focuses on principal before interest, right?
Okay.
Many investors that you have that listen to your podcast are looking to make more, position themselves for a greater return, cash flow, and they want to save as much money on their interest so they can use those funds to purchase new, right? And then continue to compound and gain more wealth. And so this program is really going to open their eyes and excitement to something really cool and fun, and really makes a difference within their own financial portfolio.
Okay. Well, I'm looking forward to this. If you wouldn't mind, not to get off subject, but maybe paint a picture too of how you actually came into this business. What brought you to Nashville, what got you into lending, and then maybe we can talk about that program in some detail. And if there's any examples we have, boy, that would be awesome too.
Yes,
yeah, paint a picture of Carey Ann and Jody.
I love it. Okay, well. So 22 years ago, I was singing in a country rock band as a young singer up in New England, and thought I was going to be one of the many that was going to so-called make it big in Nashville. And so moved to Nashville. And I always say music brought me here, but I fell into a great industry. And I know Jody's background is music as well. And maybe on a different podcast, we could do some songs for you. But what's super great about Middle Tennessee or the Nashville area is there's a great passion for music here. There's a great passion for helping people and always kind of creating some sort of solution. And so it was great to fall into this industry so many years ago, like I shared. But yes, Nashville brought both of us here. And you came from the great state of
Washington.
So New Hampshire,
complete ends of the spectrum.
Yeah.
Yeah. Well, Washington's a pretty awesome state too. I've been up there quite a bit. And one of my favorite places of all is a little place called Gig Harbor, right across the Puget Sound from Seattle. It's amazing.
I'm from that side of the Puget Sound as well.
All right. There's a seal there, a harbor seal. He's been there for years. Apparently, every time I go up there, I'll hop on a paddleboard or a kayak, and he'll follow me around. And he's got this routine down. He sees you taking a picture, he'll duck down, and like, well, where did he go? And you look around, he's behind you. So you turn and take a picture, and he ducks under again. It's just a lot of fun. Great people, great food, and of course, great environment. But in any case, well, that brings a lot of variety to the subject too, because in every market can be different. Pricing, days on market, things like that. But consider what's happening right now in the marketplace. I know people are interested to find out what can we do, because they're seeing 7%, and anybody that's been in the business, has not been in the business except for the last 10 to 20 years, we're thinking, well, that's horrible. Well, for someone like me, my first house I bought in January 1986. I'm just getting out of college. And if you think about back then, interest rates were really high. Right. I remember when they got down below 10%, I'm thinking, boy, this is awesome. So here going to 7% from 3%, it's dramatic on a percentage basis. And it is having an impact on the business. However, at the end of the day, it's not the end of the world. There are things you can do. And like you said, it's not all about the interest rate. So kind of take us from there. What can we do in today's market to still be productive and serve our clients and help the clients maybe invest a little bit too?
Yeah, and I think changing the narrative, creating and talking about affordability and comfort and utilizing all the tools. So many people for so long. I mean, if you think about a 30-year fixed mortgage was brought to us in the Great Depression. We've been talking about that type of program for so long, and it's just been what it is, right? And so a 30-year fix, and you hear some people talk about, can we have a 40 and a 50-year, right? If you really understand the program of a 30-year fix, you're paying majority, 50% of all your interest cost on that particular loan is paid within the first 10 years, right? And so we just have accepted this program for so long, and it is a great program. And so what we're talking about is every loan is created for a specific clientele, household, right? It's going to be the right thing for that particular person. But I think right now, more than ever, if we can educate ourselves and not just look at the interest rate being 7%, what options are available? We here at CMG Financial, we're talking about our buy downs, right? We're talking about using seller concessions and thinking creatively and positioning ourselves where for the next 2 years, as we navigate through today's market, we can really still create enough comfort and then utilize some other programs that a lot of the lenders are coming out with. We have something called our rate rebound program, which allows them to refinance within the next 5 years, depending on when they want to do that for very minimal cost. And so we're trying to all come together at this time and just create as much comfort. We've been blessed for so long to have interest rates very, very low. When I started the business, we were locking over 8%, 8.75, right? And so that was just the norm, and we were really busy. But then rates dropped down, and they were 3.25, and then we dabbled into the 2.25 range for so long. If people were birthed into that time frame, and that's all they know to be, 4% was high, right? And then we broke that in 5%. Wow, 6, 7, no way, right? But, with great education and really kind of changing that narrative really has made a difference here within Middle Tennessee and working closely with our real estate communities. It's not lenders against real estate agents. Together, I'm a true believer we can help so many. That's a saying I say a lot. And that's really important these days. Really to kind of create that comfort level, not gimmicky stuff, not stuff that's going to put people in poor positions, later on. But I will tell you, the program we're going to talk about today is one that people will call us for that 30-year fix. And Jody opens their eyes. Have you ever heard about this, where we pay principal before interest? Now, again, it's not for every household, right? But when you know the clientele application where she reviews that and she's like, they would be perfect for this program. I can't wait to share. And they get excited. And then they start to think about, okay, how can I start compounding my portfolio of real estate opportunities, which is only igniting more business for our real estate community, which is exciting too. So,
yeah. Well, it sounds pretty cool. As soon as you said pay principal before interest,
yeah.
That's a big eye opener, because I know a lot of investors, they'll go for loans where it's interest only, like for a period of time, and then of course they have to refinance. So I'm really interested, excited to hear more about this.
Yeah, absolutely. This program is allowed to be used on a primary home, a secondary home, and also an investment home. And so
Awesome.
I know a lot of your listeners may be investors, so this is great. And they can have up to 6 of these types of loans. And so it really gets the investor really thinking creatively. So I'll bring you back, like I shared earlier, this is not a new concept. It's been in Western Europe, Canada, and Australia for decades. Our owner of CMG Financial was over in Australia. I think this is how the story goes, was over in Australia back in 2001, 2002. After a banking conference, he went to go get a beer with another banking owner. And the banking owner in Australia was sharing with him this concept. I think they flipped over a Foster's coaster and he was jotting it all down. And all of a sudden, the light bulb started going off. And he said, I get it. I want it. We need to bring this to the United States. And so by 2005, he was able to create and launch and trademark what we know today to be called the all-in-one home loan with CMG Financial. Now, this product is combining banking and home financing. So you're checking and home financing. It's a bundle package, which is allowing it to be more of a financial tool, which really helps accelerate and create lots of momentum. And you can do multiple different things with this particular program. It allows you to pay your mortgage off faster if that's one of your intentions. It allows you to have access to your equity up to 30 years. We're the only loan that allows for that. It focuses on principal before interest. And so there's a lot of great things that allow for you to save lots and lots of interest dollars over the course of the time that you have your mortgage. And so how it works, Gary, is you are able to, like we said, purchase with primary, second, or investment. Again, we combine you with a checking account. And so if you know the purpose of a checking account that you and I have had, and possibly, I think back, I had one right when I moved to the state of Tennessee. I still have it. It's the same number for the last 22 years. It's a vehicle to move money through, right? Different channels. And so you think about that as being that vehicle right here. And so the money that you have deposited into your normal checking account, that could be income for the investors, that could be rents, that could be short-term rents, that could be long-term rents, all different types of deposits that come in. And those funds automatically at midnight sweep over and pay down your principal balance on your current mortgage. And so this program is allowing everybody to, it calculates daily interest. And so let's just use easy numbers. If the lien size was 100,000 and your check came in at 5,000, let's just say, and now your balance is now 95,000. And so the interest cost for that particular day is on 95,000. That allows that. Now you could possibly have that at 95,000 for the next 2 weeks. And now here comes a car payment, and possibly the insurance payment or the taxes due, right? Then your principal, all of those expenses come out of that account as well, and it increases your principal. So then your daily interest is based on that new principal amount. And so you may be thinking this is similar to a home equity line of credit, and it is, but the traditional equity line of credit is focused on paying interest monthly versus daily calculation, right? It's usually only good for 10 years, like you referenced, and they had to refinance. This is good for a full 30 years, right? And so you have access to utilize your equity all the time. And so this program is perfect for the folks that have more income than expenses. That's the ideal situation. So like we referenced earlier, that it's not for every household, but the folks that have more income coming in than their expenses every month, we want to utilize that money that just sits in your checking account. And I don't know about you, Gary, but as a busy mom and as a business owner, I never have time to even think about my own personal stuff sometimes. Yeah. And I look over and I'm like, oh, I have all that money sitting in a checking account that I haven't moved to a savings account, or I haven't invested it with my financial advisor. I haven't done anything with it. What could I have done with that money just sitting there? Well, this program and platform sweeps it automatically. So it takes the pressure and the thought process out of us busy folks. And it allows your money to work for you. You have access to your income and your equity at all times, which is quite amazing. And so if you think about it, as the program works and as you build up momentum, you start to gain more equity, right? And so the investors on the call are like, well, what do you and I want to do with our equity? We just don't want to, we talk about leveraging and thinking how we can build wealth and future opportunities, right? Well, we'll take that equity out and then go purchase another property, right? And we'll do the same concept, and you can do that up to 6 times. And you can pay your loan off completely, and then you can and you can utilize your equity up to 30 years, which is where, like we referenced before, the only 30-year loan available, the line of credit available on that. So it's really quite amazing. And there's some people on the call that are focused on trying to pay their loan off. That is an option. Other people want to have equity to be able to invest in future real estate or to prepare for their retirement. There's multiple different things, but many of the folks that are on the call here or on the webinar may understand that, you are, and I apologize, I said webinar, I meant podcast, so I lost my train of thought.
That's actually technically both.
Yeah, there you go. Okay, great. But again, it's a situation where you could utilize it for velocity banking. You could pay off the mortgage. There's multiple different things. Having access to our money and having control. If you and I were to do a 30-year fixed mortgage, we just pay our mortgage, and majority of it is going towards principal and going towards interest versus principal. And then the only way you and I and Jody can get access to our equity is A, we refinance, or B, we do a home equity line of credit attached to that, right? And the home equity line of credit, that follows the prime rate, which the Fed, is doing their thing with all of that. And again, we have done that for years, and that has worked, but why not allow our money to work even grander for us? For future benefits. And so the all-in-one product definitely, especially right now, because again, it's not about the interest rate, it's about the effective rate, and it's about how you are utilizing your funds to better save money in the long term, and it's making a huge difference for many.
Well, what's interesting is it sounds like it's definitely more highly leverageable, and it's actually one product as opposed to, like you said, historically we would go out and get a second loan, which is a separate set of costs. Right, all those fees that go with that, appraisals, the whole 9 yards. And I think you said you can do up to 6 of these. Is that right?
That's what you said.
6.
Yeah.
Wow, that's pretty good.
Because again, you have to qualify. You have to, make sure that you qualify. But again, those investors, they have rents that are coming in. And the other thing that's great about this program, Jody, too, is you were able to use an asset depletion, which means maybe you're W-2'd here and you've got rents here, maybe you're self-employed and you've got rents, and then you've got extra cash. We're able to utilize that cash, divide that by 120 months, and use that as income to help continue to create qualification numbers, so that's a win as well. So this is a 30-year equity line. So it is an equity line focused on principal before interest. Now, some people say, well, why would I do this if I've locked in at 2.875 interest rate, right? And so again, the thought is rate is low, I should stay. Well, if you understand that loan that you and I signed up for, it's a very expensive loan, right? The amount of interest we pay in the first 10 years could purchase you a few properties, probably, right?
Absolutely.
And so you really just want to shift your mindset on something completely different, and it's going to flip yourself upside down. And it really is it's quite a powerful tool, because Jody's been able to refinance some folks out of in the 2s and in the 3s into this, because that's how much power it is. for those folks that are looking to convert to it.
Well, what I'm thinking here, just being strategic about it, if I'm thinking like an investor, thinking, okay, well, I can only do 6, but really, guys, if you think about this, is use these 6 as your bringing the properties into your portfolio using this process, using this loan product, because it's highly leverageable and you're focused so much on principal. And a lot of investors, what to do is they'll buy a property that needs to be or should be remodeled to a higher level to collect more rents or what have you. So once they've done that, they use what a lot of people refer to as the BRRRR method: buy, remodel, rent, refinance, that kind of thing. So, and they're typically not juggling, more than 3 or 4 projects at a time anyways.
Right.
When I use this, you've got up to 6 you could do. And when you've got one, fully up to speed and fully rented, maybe go ahead and refinance that just to pay off the principal, right? And then it frees up this year to do another one.
Absolutely. So smart.
Okay.
Great. Absolutely. And you'll find our other partner who's not here today, but he and his wife have done this same concept. And now as investors, they have 17 paid off properties that they rent, right, on a regular basis. And so, yes, you can be having this utilize 6 at one time, but like you said, eventually the process is going to work for you where that's going to be paid off, right? And so now you have a portfolio that you can choose to keep or sell, do whatever you want to do with that on that particular property, but continue the process going. Mm-hmm.
Okay. Now, is there a range of what's permissible? Like, in other words, the loan has to be a minimum amount, like 100,000, and a maximum amount of $1 million. Is there a range there that people should be operating in to be able to utilize this?
I think our loan size for our investment properties is under $2 million, somewhere in that range. Primary is up to $3 million. Yeah. And so we want to be able to create a tool to be able to service all areas of the country as well. And I think that's important for many as well. And again, this is focused on so it's not focused on the prime rate. It's focused on the CMT index. So would you like to share some more insight to that?
Yes. 1 year CMT index stands for Constant Maturity Treasury Index. It's got a pretty healthy history. So the last time it was in the 4s was back in the 90s, I believe. So we kind of have to compare the economy and what the market was doing back then with where we're at right now. But it doesn't move a whole lot typically. So when we're dealing with a simple interest product like this one, when you're talking about a 0.5% interest rate change, it doesn't have the same impact as it does on a traditional mortgage, which is a compounding interest. When we are comparing a 0.5%, that's a lot when we're looking at traditional mortgage. So the fluctuations in it as we move through this loan and kind of continue sharing with it, you will find that interest rate kind of becomes a moot point. Because we're looking at how much we're leveraging our equity versus how much we're paying it down. And we really try and keep the focus there.
Yeah. And we'd love to share with you, Gary, a calculator that's really easy for your folks that are watching. And so we'll go ahead and share our screen here.
That would be great. So for the folks, if you're in your car, keep listening. We'll describe it for you. And then when you get home, you can always go to YouTube and grab the video,
Yes, absolutely. And this is a calculator that's easy to use because, like we said before, it's not for every household, but it is for the right person. That, like we said, they want to have their income work for them. Their expenses are less than their income, and that idle money that's just sitting there, it definitely can work for them. And so we've had many different scenarios that we can even talk about, right? And if you want to plug one in here, I think you kind of set one up already.
Yeah. So my last phone call conversation was with a woman who had her primary residence as well as an investment property. She had about almost $300,000 left to pay on her primary mortgage, which she was paying at 3.25%. So the conversation was, why on earth would I refinance out of a 3.25% interest rate into a 7.5% interest rate? So as we kind of went through this scenario and their income versus expenses and what their timeline payoff would look like, which I'll kind of walk through here in a second, she was going to pay off her mortgage in like 4.5 years. She would then have a $500,000 line of credit because even though she owed 300, she was able to borrow up to 5. She would then have a free and clear line of credit available. She says, well, Jody, I have $250,000 left on my investment property. What would it look like if I drew out that 250 to then go pay off my investment property, which was cash flowing really well, but she was setting herself up for retirement.
Okay.
So we recalculated everything, plugged in the new numbers. She was then going to pay off that mortgage, implementing the strategy in another 4 years. So the conversation went from you're going to pay off your mortgage in 4 years on your primary, and then another 4 years later, 4.5 years later, you pay off your investment property. Mortgage free in 9 years total, and have a $500,000 line of credit available to her in the event that she needed it to either re-leverage, go purchase another property, or whatever the case may be.
Okay.
When we went over the effective interest rate, APR, what was her true cost that she'd be paying on those funds after all the principal reductions that she was applying? Her true effective interest rate was 1.2%.
Okay.
That right there close the conversation on why would I go from a 3.25 to a 7.5? Well, because your true cost, what you were really paying on that money at the end of those 9 years was only 1.2%. That is why.
Right. And that makes the eyeballs and open up and get the excitement going for everybody here. So we'll plug in. Do you see our calculator here, Gary?
Yes, I do. Thank you. That looks good. I can see it clearly. And for everybody, if you're listening in your car, don't worry. You'll be able to get this on YouTube. Also, we'll figure out a way to put a link to it in the show notes. Also,
yes, we'll do that for sure.
Okay.
All right. So you're going to plug in.
So we're going to plug in a couple numbers here. So we're going to just say, when we're talking about current balance, we're talking about what your outstanding principal balance is on the mortgage for the property that you have in mind. Mm-hmm. A lot of times I will start folks off of their primary. We'll start there just so they can get familiar and acclimated to the strategy, get their disciplines in place. And then we refinance or put another mortgage, another home all-in-one HELOC on an investment property. But I'm just going to use the primary residence for the sake of this conversation and for my example. So if you owe $500,000 on your primary residence, that's where we're going to put right here, current balance. Okay. Interest rate. Right now, we have a couple different options. You can do the variable route, which means that it adjusts every month, or you can kind of lock yourself into a fixed rate option, which is either 3 years or 5 years. I'm putting a lot of folks in the 3-year just because it's a little bit cheaper, and it kind of gives us the next 3 years to really watch our economy, watch our market, and give them that protection and that kind of just that ease, that comfortability of, okay, my rate's not going to change. Let me get used to this new strategy without having to worry about the interest rate changing. So you've got 3 different options here. I'm going to go ahead and go with the 3-year fixed option for the sake of this conversation, which right now that interest rate is 7.55. Okay. Rate change per year. If we were talking about the adjustable rate, meaning adjusting every month, I like to be conservative and say, okay, let's just assume that the interest rate is going to change 0.5% every single year. Now, this doesn't take into account that there is a ceiling. So the interest rate will never go above 6% above your start rate. So if we're starting at 7.5, that interest rate will never go beyond 13.5. Okay. Well, this calculator doesn't take that into consideration. So keep that in mind. But right now, because we're going to be in a fixed rate for the next 3 years, I'm going to put 0 just so we can look at the next 36 months and really see how aggressive you're going to be able to be with this scenario.
Okay. I just wanted to take a moment to say thank you for participating in the Massive Passive Cash Flow podcast. Also wanted to let you know that the book, Global Investor Agent, is officially out in print and in Kindle on Amazon. You can get it by clicking on the link right here. If you are an agent, definitely grab yourself a copy. This book, guys, was not just written by me. I also included 8 other investor agents from around the country. And I didn't just handpick them. I literally opened it up to the entire audience, and it was first come, first serve. So you're going to get feedback from brand new agents all the way up to top 25 team leaders. Some on my team, some are not on my team, with valuable insight and instructions and guidance and actual checklists to follow to not just survive, but thrive in this market. I know you're looking for that advantage, and this is it. By the way, if you are an investor, grab a copy for your agent. And for everybody, all profits from the sale of the book Kindle and print, all go to the Healing House Foundation. 100%. Thank you for doing that too, guys. Let's get back to the show.
Payoff goal in months. I always like to see what it would look like after 10 years because that's our initial draw period, right? That's the interest only payment that you can really draw from and really leverage and drop your payments down. After the year 10, we have year 11 through 30. If there is an outstanding balance, that portion will then be amortized over 20 years. So it's going to force you to make some principal payments. You can still draw from a line of credit. It will just recalculate that amortization on a monthly basis. But I want to make sure that you guys are all getting to a zero balance within the first 10 years. So this is our goal. And you'll see two different numbers to the right of this calculation down here. And I'll explain why we have the goal and what the new payment really means. Current monthly payment. This is all net household income that is currently going into your checking account right now.
That would include your income and also your rents.
Correct.
All income.
All income. And your rents are going to be the difference, right? It's going to be your the difference between the mortgage payment and what you're getting on that property. So if you're making some money off of it, that's the income that you want to include here in this scenario. So I'm going to leave it at the 15 grand because I like that number. Additional monthly charges. Now this is going to be all your expenses. So those of us that live on a budget, this number is going to be real easy to get to because we're going to know what we're paying. For those of us that don't, you're going to want to create one. This is gas, groceries, insurance, utilities, childcare, car payments, you name it. I want a credit card, taxes and insurance on your property, everything minus the mortgage payment, because that's already going to get figured out in this scenario. So we just want to look at all your expenses. So for the sake of this situation, we're going to say they're living off of a budget of $7,500 a month. That doesn't include the mortgage, but that's going to cover everything. Annual fee for our all-in-one HELOC is $65 a year. As you will notice, if you even change this to zero, it's not going to have much of an impact. But it's a key thing to note that once you do get to zero, it's only going to cost you $65 a year to keep that thing open and active. So as we get down into this section, how do I scroll? Thank you. We're going to see two scenarios in this credit line payoff by month. This big, large neon green section. And then we have this skinny little line right up here. This portion right here is going to tell us, based on the scenario above, 15,000 going in, 7,500 going out, how quickly you will pay off your mortgage given that scenario. And with the assumption, this interest rate's not going to change for the next 36 months, right? So we're going to say that. If that's the case, that means that you would pay off your mortgage in 88 months. You would have a zero balance in 88 months. If you wanted to take the full 10 years, because remember our payoff and goal was 10 years. This is assuming if you want to take the full 10 years, you actually only need to deposit in or make a payment of $13,501. All the while paying out $7,500 in expenses. So you've got two different numbers here. If you want to diversify, not put all your eggs in one basket, you have the information right here to do so in terms of guaranteeing that timeline.
And some folks will talk to their financial advisor, which you have had multiple conversations with, and they say, technically, you don't need to pay off your mortgage that fast, right? And so let's put that on a 10 or 15 year plan, and let's utilize the extra funds that you have to invest here or there. And go from there. So,
and I want to get rid of this right here so I can.
You can just.
Oh, there we go. Okay. So I'm going to show you the math and how this works. We're going to click on our report. We're going to scroll down to our payment schedule. So this is what a simple interest payment schedule looks like. And these are all in months right here. So here's our math, $15,000 going in. This is our payment that we're making on that HELOC. We have our interest. This is our mortgage payment. This is the interest that's being calculated on a monthly basis that you will owe. They will automatically pull this amount straight from the line of credit each month. So you won't
Mhm.
ever really make a traditional mortgage payment like we used to.
And so this program doesn't have any defaults since 2005 and has not had one single delinquency since its creation, right? So this is a really safe loan for many folks.
Yep. And then we have our expenses, $7,500 going out.
Mhm.
Here is the magic. Watch this principal balance. In the first 11 months, so in the first year, you will have paid down almost over $50,000 towards your principal balance.
Yeah.
I promise every person listening to this right now can say that they have not paid that on average on their traditional mortgage in 1 year.
No.
So what that also tells us then is, okay, well, what happens to that 50,000? It sits available to you to draw from at any point in time.
Emergencies, a new purchase, a down payment on another investment property.
So this is kind of showing us our math. It's really telling you how quickly, and then you can start planning. When is my next purchase? When am I going to have enough money to pull that from here to go and invest in another property or a renovation or whatever the case may be? The column right here is going to give that to you. I use this as a guide. I don't use it as for literal purposes because again, it's assuming this interest rate is going to go up 0.5% every year, right? It was, but even if it does go up 0.5%, look what happens. 88 months was our original.
Okay.
Now it goes to 92.
If the rate was to jump.
If the rate was to go up 0.5% every year. So as you can see, that interest rate really isn't having that same impact. And it allows you to decide, okay, I'm only going to lose 4 or 5 months here on my payoff timeline. Where can I make that up? Kind of, you're really the captain of this ship. You are driving how fast you want to pay this off. But a couple things to think of here is if you don't want to pay off your mortgage, well, this is still a really good tool to use to re-leverage and go purchase other properties. So you don't have to look at this as I'm going to pay off my mortgage. I can look at this as I'm going to have access to the equity in my home to keep borrowing, and I don't have to keep going to the bank and then be subject to whatever the rates are at that time, which can get pretty expensive as we've learned right now.
You know, some of the folks on the call today may be real estate agents that are listening. You know, if you experienced the last turn, you know, back in 2008, some people got themselves in a little bit of a bind because they had too many properties, couldn't rent them or sell them properly. And so they were kind of just trying to stay afloat. Now we are converting a lot of those same real estate agents and planning ahead onto this particular type of program. So they're ready when the market comes down, they're ready to purchase more, right? And continue to build versus have their properties, you know, go in the wrong direction and have some concerns. So we talk about kind of the recession-proof loan for the folks that are in the real estate community. This is also a product when COVID hit. I know you got many calls too. When COVID hit and folks lost their job, they never had a concern. They didn't have to worry about going to a forbearance or have a delinquency because they were able to utilize that equity to stay afloat for the short period of time until they got themselves back on track. And so that's why this loan is really quite a win because here's the deal. We might have equity in our home, but when the market shifts, the banks that offer equity lines, they have the ability to change the guidelines. Their loan to value was this, now it's that. They were allowing for this credit score, now they want that credit score. When you are into this particular program, there's no shifting. Like Jody said, it is a true line of credit, which is allowed up to the 10 years, but you have access to that for a full 30, which is the only loan available out there that does that. So the sweep numbers for the interest is on the 20th or 21st day. Is that right?
It's the 25th of every month.
Okay. So if you think about it, your money is working for you up until that time frame, daily calculation up until that time frame, and it automatically sweeps. So you don't have to worry about it. And this is great for even the older community, older generation, where you just don't want to stress about are they going to make a payment or not, that kind of thing. It's just an automatic sweep, which is amazing. You know, folks right now are thinking about how to leverage and make more money on their money. And so we're even seeing folks talk about changing out of 5 credit cards into the one that is allowing them to gain the extra points, right? And then they just sweep 1 credit card payment every month, right? And so that's they plan it. So they know that they want their money to be working for them up until the time frame, and they know it's going to sweep just on that 25th. So their payment is made right before that, right? So you can position everything to really work in your benefit from an interest savings.
Yeah.
You were talking about personal story earlier, and just I will go ahead and just share my own.
Okay.
I am in this all-in-one HELOC personally. And the way that I found it worked best for me, because I want to keep things simple. I like things, just give me 5 things I need to think about, and that's all I want.
Yeah, I'm down to 3.
Right. So I have my payroll automatically goes into deposits right into my sweep account. Is what we call it. That is our checking account. It gives us the account number, a routing number for all those auto drafts and auto payments. I get a debit card, and I get good old fashioned checks. So instead of using the debit card that it comes with to pay all my expenses, I use a rewards credit card. I have family in Pacific Northwest. I really want to be able to travel back to see them. So this credit card company is going to help me do that.
Yes.
So I'm taking full advantage of it. I put everything on there, all my living expenses, minus like maybe gas and water, I think, because they don't let me put it on a credit card. So that's when I utilize the account number and routing number to pay those on auto pay.
Okay.
Well, I don't like paying double interest on my credit card and on my HELOC. So, as I'm cheap. So I go ahead and I pay off.
You're frugal.
Right.
You're frugal.
Yes. I take the money from my HELOC to pay off that credit card in full every single month. And then I just repeat the process. So what ends up happening is all my money is sitting on that line of credit, driving that principal balance down. So when they go to calculate what my average daily principal balance was, because that's what they're going to do to determine the amount of interest I'm paying, it's at the lowest point I could possibly make it. It may tick up 3 times: water, gas, and that credit card payment. And then obviously the interest only payment. But those 4 days or 4 transactions aren't going to have enough impact that's going to skyrocket my interest. It doesn't. It's because they're looking at an average. So now my money that would normally be sitting in my checking and savings account every month, doing and yielding me nothing, is now working for me, allowing me to pay off my mortgage. And my trajectory was 7 years. And in that 7, and I still have a few years left to go, but in that time frame, I wanted to renovate my kitchen. I'm in the process of doing that. This is going to become an investment property for me going forward. So what I did is I came up here. If you guys can still see the screen, you've got this future draws option. So those of you that are investors, you guys can say, okay, well, 18 months from now, I want to take out $100,000 and go and invest it. Well, you can plan accordingly. You're going to take out $100,000. Is that 100? Is that too many zeros?
Yeah, there you go.
There we go.
Okay.
18 months from now. And then you can come down here and it will show you how many months it just added to your timeline by doing that. So you can really start planning accordingly and still be able to be in control and driving your timeline, your payoff.
Yeah.
So it gives you a great feature.
That's actually pretty awesome. So now, what's the process for doing that? Like when you wanted to utilize some of your equity to do the remodeling, is it just simply move, like online, just log in and move the money, move it over? Like you don't have to go through a process and
no.
Wow.
The contractors that I worked for had an online portal that I could make my payments with. So I used the debit card that I get with my HELOC, and I entered in that information and made my payments to them. And then the money just came right off my line of credit.
Similar, like you might be leading towards, if you were to do a remodel and you did like a mini construction loan, you would have draw requests and things. This is your money. You have access to your money 24/7 at any time. You can put a Starbucks on this. You could put a new door on this. You can do whatever works best for you and your family. We know of some folks, and what's kind of interesting is we talked to a lot of the mortgage industry, especially those that are within CMG. All 90% have this loan, right? So it is one that makes the most sense when you are even in the industry of selling, all types of mortgages. The first time home buyer with 3.5% down who has some things in their past, an FHA is a great loan for them, right? And so it just depends upon, talking with and utilizing this program for the right household. Not everybody's going to have the same comfort level, but again, talking to investors, this is a huge win, for them. There's a non-traditional line of credit. So you could do the same thing, but if you think about it, everything has to be manually moved at that point, right? And so the money's still there, and I have to spend half my time shifting and doing and all of that. The power behind this is the combination of banking and mortgage finance connected, and the automatic sweep, which is really creates the power behind it. Yeah.
Well, it's definitely, this is really unique, and it's very creative too. And the thing I like about it is, I've seen other programs out there, not exactly like this, but ways for people to pay their mortgages down faster. But there's always, they were really expensive to facilitate. This is using existing products. If we already have people understand checking accounts, people understand lines of credit. They understand paying your mortgage down, they understand amortization, and this is this and the cool thing is actually, let me ask you this. So you have your sweep account, but everything goes into your income from rents, jobs, and so forth. Is it up to you to allocate a portion to the principal, or is it programmed so you set it and it does it automatically?
So every deposit sweeps to your principal at midnight every night. Every time the deposit comes in, it sweeps automatically towards your principal. You then have the ability to make the decision to redraw that out if you wanted to use it for this or that. And so it's an automatic movement. So that's where you can start that daily calculation of interest on the average. Okay.
I like that. This, guys, I got to tell you, this is actually one of the best products I think I've seen come out in a long time. It's simple, it's easy, and I'm grateful for you being here showing us. I think a lot of people are going to be interested. And by the way, if someone wants to get a hold of you, is there a website, email? What's the best way for them to just inquire and say, hey, can they just run a scenario by you and, hey, Carey Ann, Jody, does this look like I'm a good candidate for this?
Yes, absolutely. Just to kind of reiterate, amortized loans are very expensive, right? This program was created just to give you a better use of your money, and really save you as much money. And the investors understand about saving, because then we leverage it and start to make more. But yes, they can always reach us. And we have an easy number here. It's 877-456-4456. So that's 877-456-4456. And our email as a team is mymortgageteam@cmgfi.com. That's mymortgageteam@cmgfi.com. We would be honored to talk with you about seeing if your scenario makes the most sense, for you and your family, maybe on your primary, position you in a great place for the next so many years, and then future, and then talk about if you have equity in your current home, and how we can leverage those funds for you for future gains. Okay. So just the email, mymortgageteam@cmg.com. fi.com. So it's for CMG Financial. Yep. So it's CMG, F as in Frank, I as in ice.com. Gotcha. Thank you. Because I'm going to repeat that too here again. We're starting to wrap this up. Well, I'll tell you what, I know we're probably getting close to time here, but is there any final words of wisdom? And it could be anything, something you learned from your grandmom or granddad, for example, but anything timely and relevant too. I mean, people are really looking for answers right now, and almost all walks of financial life. And this certainly answers a call very clearly on one of them, So. Oh, yes. And I think I'm so grateful to work for a company that is innovative and thinking 2 steps ahead. It's amazing why we here in the United States have just always done what we've always done, which really is to sell and to just capture very expensive, amortized loans. And again, there's a purpose for that. But if we can educate and teach more about opportunities and tools that are out there to help position. I mean, we talk about retirement, right? The folks that are in retirement age don't have the funds today to truly retire, right? I mean, it is a situation where it's a little upside down. And so this positions, for a sunny day, a rainy day, and for that future retirement, right? And really sets up great success.
Yeah, I love it. So everybody listening, write this down. If you're driving, pull over, or you can just go back in the recording. So it's 877-456-4456. Is that correct?
Yes. Okay. Since we're in Nashville, we do a little dance to it. 877-456-4456.
Oh, I like it. Yeah. Spoken like a true musician,
There you go. Yeah.
And then it emails mymortgageteam@cmgfi.com.
Yes.
And you're asking for Jody Watson and Carey Ann Sear, and Sear is CYR. Okay.
Yes. And actually that is our email. So you don't even have to ask for us. We will respond kindly and help and jump on that for you. Like I said, Jody specializes in this product and has been selling it now for 12 plus years, I think.
Oh, wow.
Yeah. And so, and like you said, it's not a new concept, but we're really working hard to get the word out and share with many more just consumers and or investors and help them make a difference.
Yeah. Well, that's the other thing too, is we obviously serve both in our business. We're so tightly woven together, brokerage and finance. And this serves, I mean, every investor is most likely also a homeowner, right? Mm-hmm. So it really does serves the, and what's interesting is our model, guys, for the team, the Global Investor Agent team, is to serve both owner occupants and investors and have the right tools that serve both, the right methodology, terminology, and understanding the motivations, because they are different. We look at a home for different reasons when we're living there than we do for looking at it for an investment. So in any case, for everybody listening, I know I asked this a lot, but this is one special request. Is definitely leave a good review on this one. Okay. Remember, your reviews are what is the currency of podcasts. It's what makes the podcast go. And so when you do that, I know it takes a minute to do it. And we know you're busy, but we really do appreciate it. And helps us bring on more great guests like Jody and Carey Ann. So if you could do that, that'd be awesome. And email Jody and Carey Ann again at mymortgageteam@cmgfi.com, or call them at 877-456-4456. And as soon as you're done that, go over to globalinvestoragent.com. If you're a consumer, pick one of your agents, tell them you heard about this, and need to get on the ball and get busy and get this working for them. And if you are an agent, boy, don't wait. You click on Learn More now on the website and get some help. We know what it's like out there. The volume's dropping. What are you going to do? This is a great opportunity to share with your clients.
Absolutely. And remember, even though we're in Nashville, we serve all states. And so if you're listening from a different state, feel free to reach out anytime. We're excited for the opportunity to discuss and talk with you.
Yeah. Well, I'll tell you what, Carey Ann and Jody, this has been one of my favorite podcasts. And so I really appreciate you doing this. Maybe what we'll do is we'll have some case studies coming down the road, and you're certainly welcome to share them. And I do teach a class every Monday night called Monday Night Live. It's totally free. We open it up to the mostly the agents. We do get a lot of investors on, and we do from time to time bring on guests. And I think this should be a great way for you to show a group of about 100 agents across the country what this is all about. So don't just be on the lookout for email from Beverly about this. So we'd love to have you on class.
We'd be honored to join in. I love that. And so grateful to be here, Carey. And thank you so much for having us.
Thank you.
You're welcome. You guys take care. God bless you, and God bless all the listeners. We'll see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.